Welcome to Trading Lounge and the US Indices, and starting with the SP 500 here on the daily chart. We have this count here, and that is wave 3 here and wave 4 over here as an A wave, a B wave, down for 1, back for 2, down for 3, 4 and 5 here. And in this wave from 2 here down to 3 here, we're looking for 5 waves. So we can look at this as wave 1 and 2 here, and 3 and 4 and 5 here. We do need to see a turn on this in the next session. So Friday session, we want to see negative. If this market pushes any higher, then we're going to be looking at our alternative count here, which we've viewed before, which is a triangle pattern here. So I'll just go over that. So from wave 3 here, triangle pattern in terms of an A wave, a B wave, a C wave, a D wave here, and an E wave here. This E wave here is okay in relationship to wave D here, but it also could get a little bit wider in terms of an A wave here, a B wave back up in here, and a C wave here, and then moving off. But it's okay the way it is too as such, but we can look at this alternative count a little bit later once we've got a little bit more information on this move coming up here, because this move up here so far is only in 3 waves, and it's pulled back up to the 61.8% retracement level of wave D here. So it could certainly be wave 1 down here, wave 2 here, and then moving down for wave 3 here. So we just need to work through this little junction here, and we need a strategy to do that, and also want to investigate this a little bit further here, so we're a bit clear on that. So first of all, coming back to the daily chart and looking at it like this here, from wave 2 down to wave 3 here. Let's drill in and pull this apart a little bit. So where are we daily? So we can go to the 4-hour chart. It's not really going to give us much, but so what I'm going to do now is I'm going to look at this all down here as wave 1, and then wave 2 back to this particular point here. So I'll just drill into that. I'm not sure if I've done the 2-hour or 1 hour. Let's check out the 1 hour. Okay. So my reasoning behind this. Okay. So first of all, on the futures market here, it doesn't look so hot with from the top here as wave 1 and 2 and 3. A, B, C for 4, or you can even have wave 3 over here for 4, and then down for 5 here. So wave 5 is the longest wave here, but it does appear that wave 3 is the shortest one compared to wave 1 here. But if I look at the SP 500, this is a 15-minute chart here. So this 5 waves coming down here, this is what I want to explain on the cash market here, and it fits quite well actually. So we can look at when we look at this first leg here, and then this little move up here, so we can look at this as being 1 and 2 and 3 here, and the gapping normally occurs in the 3rd wave, so the 3rd wave gap here, and then the 4th and the 5th. So we've got 1, 2, 3, 4, and then 5 little waves in here. So it's very clear that this can be wave 1 here, and then a corrective wave for wave 2, and then wave 3 here is down for 1, back for 2, nice strong third wave in here, an A and a B and a C for wave 4, and down for wave 5 here. So this can be the 3rd wave in here, and actually this 3rd wave here on the physical market, the cash market here, is actually longer than wave 1 coming down here. So it fits as wave 1 and 2 and 3 here, and then an A wave, a B wave, and a C wave for wave 4. That could also be counted a little bit differently, but that's fine as it stands at the moment. And then wave 5 has the extension in it with 1 and 2 and 3 and 4 and 5 here. So it does count down nicely as 5 waves on the cash market. Okay, so I can't ignore that. So this move back up here is into group 2. So group 2 is 65, 72 and 80 here. It's in group 2 here. And it's also into the supply zone of this previous 4th wave here. It's also at the current high here, is at the 61.8% mark here. So for the futures and CFD market. So does this this counts okay as 5 waves. I know that it can count as an ABC pattern as well, because we could look at this length here and then this length here. So we could say the A wave here in 3 waves as an A and a B and a C here for the A wave, an A and a B and a C for the B wave, and then the C wave down here. And the A wave has the same length as wave C here, roughly. So it could be counted as an ABC as well. So I'm aware of that situation, because we don't have the extension in the 3rd wave to really define it as a impulse wave to the downside. So normally, most of the time the extension happens in wave 3 here, but it can happen in wave 1 and it can happen in wave 5 too. So does this count up here to the 61.8% as a corrective wave? Well, yes it does, but it could also be an unfinished impulse wave to the upside as well. So if I go from the low here, I go an A and a B wave here, and then I would look at this as a 5 wave move to the upside, which fits quite nicely as 1 and 2, and the 3rd wave here and the 4th wave here, and then 5 little waves up here for wave 5. So it can count as an A and a B and a C wave here, and that counts nicely as that, because we've got a gap in the middle here, but not that that's going to help us a lot, because it also, in an impulse wave, it could be counted as 1 and 2 here, and then this all being the 3rd wave up here, pulling back to the 4th wave of 1 lesser degree, which is here, and then moving up higher here. So what I can kind of glean from this is that on the cash market, if we have another move higher than this one here, then we'll have to rule out that this is going to be an ABC pattern. So it's a very fine, subtle, but powerful point here, is that because I can see we've got an A and a B here, and then 5 little waves up here for wave 1 and 2 here, nice strong 3rd wave here, and the 4th wave, and 1 and 2 and 3 and 4 and 5. So this is a 15-minute chart on the cash, so it counts really nice. So if we have a move above this little high here, then we know that we're going to be going higher from that point. Okay, so just keep an eye on the cash market at this point here, and that will help us a lot defining what's going to happen. While we've got this little chart here and you've got your noggin around that particular picture, then it's the same here for the Nasdaq as well. So we've got down here for 1 and 2 and all of the 3rd wave here, and then the 4th wave either to here or to here, and then the 5th wave moving down through to here, but we can also count that as 1 and 2 here, and all the way down for the 3rd wave here, which would be 1, 2, 3, 4 and 5 here. So it does count, we can count this as an impulse wave, and the same with thing to the upside here as well, as 1 or an A and a B and 1 and 2 and 3 and 4 and 5 here. So we're kind of in the same boat here. So any sort of more powerful move up here, and then we need to start looking at a bullish market at that point. So just bear that in mind, and that's how it sits here. So we can come back to this now, and 1 and 2 and 3 and 4 and down for 5. Now, if I look at Google, which is a pretty sort of settled, stable sort of stock here, we can look at this in a couple of ways. We can look at it. The problem with this is, well, it's not really a problem. It's the same thing. The move up through here counts as a corrective wave. So I could count this as an A wave to here, B wave to here, C wave to here, and an A wave here for this one, and then a B wave here, and then 5 waves coming down here for wave C. It still makes this sort of corrective here, but it could also make this a triangle pattern too, like we've done on the US markets as an A, B, C, D, and E. But the problem about that, and what I don't like about that, is that this C wave here tends to have more of a 5 wave sequence in it rather than 3 waves, so I can't really put it as a triangle. So overall, there's still a good case for being bearish with all of this, and even if this was wave 1 up here, this is pulled back down past the 61.8% mark. Not that that's the end of the world, of course. I mean, it still can be there until it takes out this low here. But also too, when we look at this at the 1,000 mark here, we can see it's like a ball bouncing, isn't it? The first bounce is always the highest, then the next one, and then the next one, and then it gets to a point and just drops through. So that's what I'm thinking for this. Amazon has moved higher, you know, if we look at the Nasdaq here, we can look. This is the alternative count here too, the same as the S&P in terms of an A and a B, and a C and a D and an E wave here on this, and moving up higher here. So, and it is moving up here higher. It's moved past the 61.8% mark here for this market, driven by Amazon. And I don't know why those stocks actually stopped trading on the Thursday there, so on the Wednesday. Let's just see how they settle in after this particular session here. We'll see how these travel during the day here, and we'll update the charts in the London opening session and through the New York session as well. So we'll have a better idea of what we're looking at that point. Okay, alrighty, cheers.